quick checkup in the Discord. Got my analysis tab, market review, Wednesday, 4th September, and this is what you get in the community. A few hours before market open, I'll just update what I'm looking at. Here you can see I found a measuring gap. I'm expecting price to run up here, up and then down. I'll just draw everything again. I always start out by drawing the new day opening gaps. Pretty straightforward. You just do it like this. So that's one. And then this one is a new week from 1st September to the 29th. Draw it and I change it to got nlog there. Got a preset for event horizons. So draw it from the bottom to the top of that one. I don't know if I like the purple color, but I had them as white and they kept just, I couldn't really tell what they were because I have so many white lines on the chart. So for now they're purple, but one new day to the other, basically, one new week to the other. Nice. So that's all of our new day, new week opening gaps and event horizon. So what I do then is I add it all to one group and I title it ndog, nwog, ehpda. And what that means is I can make it all disappear. I had daily levels marked out. This sell side imbalance here. That's what we're currently trading in the lower half. Rectangle that doesn't have any outlines. It's just wick. Discount, wick, consequent encroachment. Sell side on the 4 hour, this singular low here. As you can see, this low, it took it out, then we got a run up. But on the S&P, this low has not been met. It's a bit fishy to me. There's liquidity there. But also, if I go down to, say, the 1 hour, that very same low, this is that discount wick, that very same low is equal lows. Relative equal lows liquidity, previous day low. Bearish order block, opening price, 1 day. So there's that, and then there's this, a previous day's high. Those are the daily levels. What I do again, grab them all, put them in an object group, daily bias. So now, as you can see, you can have the new day, new week, and event horizons, and the daily levels. You can get rid of the daily levels, have them back, get rid of them. Cool. The 4 hour pretty much says the same stuff that the daily says. I think this high could be taken out before we go lower. Here to here, that's the equilibrium. On the 15-minute, then we mark out our OPL. Midnight open, bring it out. I like to bring it out to 11:30. That one there. 8:30. London sell side. I also always have quadrants and standard deviations. This is 8 o'clock low, the high between 8 and midnight. So that's standard deviations of the Asian range. What I do want to take your attention to is this. So these are those. This is that sell side. Lines up perfectly with the 5th standard deviation of the Asian range. So as I'm expecting price to come lower, I'm watching these levels. This is our dealing range. We have smaller dealing ranges inside of this, like from here to here. This high here, I was watching. So I'm expecting this high to be swept in a Judas. If so, I'll look for shorts. And if you check this out, from this low up to this, mark out this gap, you have yourselves a measuring gap. Asia high, and this is Asia low. This is our current equilibrium of the range from here to here. But I'm expecting range expansion up to here, which just about lines up with this gap, making it a measuring gap. At market open, I would like to see something like this. I'd only be looking really to take this portion of the move down to the Asia lows. That's a nice 50 points. So I'm looking to catch at least 30 points today and leave one runner. In this short idea, most of my position will be taken off at Asia lows. Look at how those 15-minute bodies are flat at Asia lows. You see, even though this low swept below this, these bodies are really flat. That's liquidity. My runner for previous day's low will depend on how price trades through this BPR on a 15-minute basis. So here's the screenshot, this balanced price range, this inefficiency, and then if I stretch that to this inefficiency, then all of this is balanced. What I mean by that is, say we get a sweep down, like a sweep up, and then we start coming lower. I would have taken off most of my position here. If I have 3 micros on, I can only take like one full pull of like 35 points. That's my rule. If I have 5 on or any more than 3, I can leave the other 1 or 2 as runners. So say I leave a runner on here, my stop's already going to be around about break even, which is up here, right? So we start running down. And then we get here and we get like this. This is like a breaker. Then delivering out of that balanced price range, I would just expect higher prices. This is literally exactly what I outlined. This is me buying the breaker after price swept liquidity into the balanced price range. This was the trade of the day. I'm editing it back and I think, whoa, I'm a genius. You got to try out the OPL model, man. But if we come down and we close here and then we knock our heads here, we spend time in the lower half, I'd expect continuation through all of this, down, again, down to there. So this balanced price range, which I am measuring on the 15-minute, is pertinent to how I view price. So this is actually our pre-market high. So far, this is our pre-market low. So far. So I'll keep those in, and then now I can go like this, call it OPL. Let's say at 9:30, we run down, and we deliver out of this. then I just look for longs, like I said, London low swept, Asia low swept, delivering out the balanced price range. Then I'd look for a manipulation up to take out the pre-market highs, these relatively equal highs that on the S&P, they're also relatively equal. They're not as high probability because this high took out these highs, but like I said, you go back, you got all of this, and you got all of this. Off we go. Now I can check the regular trading hours gap. Very small, got totally filled in. Is it going to choke on apple juice? I'm choking on an apple. So if it like takes the high, but then is closing below daily order block, that'd be great. I want to go short, but with news at 10 and it missing that liquidity, it might not be clean enough for me. Dow looks like it's about to rip higher, and dollar looks like it wants to go lower. So if I miss out on this trade, that's fine. If we get that set up with the balanced price range, like I said, where it either wants to go long or short, then that'll be our 10 a.m. silver bullet, really. Because now this is relatively equal highs with this. They're relatively equal now. You could totally sell short here inside this as an inversion, but I'm not taking it personally. It's like intuition, right? You develop intuition over years, and like I trust my intuition more than like my fear of missing out. I'd rather trust my intuition that says I don't like this enough, and it doesn't mean I'm wrong. It means I sat out of a trade and was willing to either take no trades or take one later. Whereas, if you're just trying to make money, there's no intuition. You think, oh, I can't let this trade run off without me. I couldn't possibly have an idea and not put risk on it. This idea isn't as good to me as other ideas for many reasons. The RTH gap is shit. There's 10 a.m. news, right? We didn't take that liquidity. Look at these relatively equal highs for the S&P. It's quite decoupled. The S&P is climbing higher. It's also coming up to that time now where I can't take a trade until 10 a.m. So I can take a trade in the first 15 minutes. So for instance, if we took this trade, say we took this trade at 9:40 as it tapped into this, so we entered there 96. Say it slows down here. The 5 minute does not create a change in the state at 9:45. I will cut the trade or I will put my stop at break even because in 15 minutes there is going to be news and I don't want to be at risk of that. So we're just going to keep tape reading this. 9:45 is where I would stop looking for trades until 10 o'clock. And so if we're not getting fast displacement lower, then I would cut the trade. Which means this trade has 2 minutes left in order to create a sharp displacement through this and preferably take out this. Because at that point, your stop's protected. You can go break even. This is not financial advice. I don't give financial advice. S&P is climbing higher now. It's a good thing I trusted my intuition. I'm still not touching anything until 10 a.m. We've had 10 a.m. news like most days this week, and it's been a bit of a nightmare for me. You kind of have to wait, I'd rather not take a trade today than take a loss. Something tells me not to take it, to be honest. Nah, it's nothing we can do now but watch. Trade sucks, man. Sucks. A little bit impatient, I think. Yeah, I think I did, honestly. Thing is like getting above all of this is going to be high resistance liquidity. I bought here, right? I bought where digging through this is going to be high resistance. I bought after it digged through the low resistance. That is honestly my bad. Something for the journal. I'm going to buy this as a breaker though. So what I want to see is 5 minute closure above that level there, which lines up with this, and I want to see 1 minute breakaway gaps. So I hope that acts. I want to see that gap stay open, act as a breakaway. If it does, I'll buy the breaker. I'm just hoping that there's a 5 minute closure as well. This is common, right? Like price going into a gap, one last sweep down, and like I said, that balanced price range was right there, so I should have waited, really. Now, if this trade fails, that just means my bias is wrong. That just means I don't think it's going for these highs. So this is the trade that played out. We held it until around about 11:10. The whole way through, I was reading order flow, explaining which gaps should act as breakaway gaps, which order blocks should work, what parts of the range we should react from, where the pertinent new day and new week opening gaps, and how to manage your risk. Now, this is the kind of education I'll be giving every day in the Discord. Links below, links all over my socials. I want you to join. I want you to get in while it's still free. We took one loss and then we mitigated the loss. I'm break even on the day, and we took
an $130 win after a $130 loss. And I learned and I went through and I explained what it was that was wrong about that first trade, how we got the narrative correct. Every single day in the Discord, even before I start streaming, you will get a plethora of high detail chart analysis. So please join up, be there next time, and you can ask questions in the streams. I appreciate you watching. I appreciate you learning. Good luck and good trading.